Hello, this is Mark Carrington. It is July 20th, 2015. I've been asked the question, should I short Apple shares at this level? Well, let's go through the analysis that I would do to answer that question. So I have here a daily chart for Apple. And the first thing I will do is I'm going to have a look and see what the integrity of the trend line to see if that last breakdown that we saw here over the last week, the weeks before, broke the uptrend. So I'm going to change the chart to a weekly chart and have a look at the trend line. I'm going to draw a trend in from this bottom over here, and I'm going to join as many dots as I can. So taking it through the first one there, and we can see from this chart that we still have a gap here above the trend line. So I'm comfortable that the trend line is still holding. Although some would argue, or can argue, that you can draw a trend line from this level here, and we'll see that we have held that trend line, tested it below, and then gone up above it. So I'm comfortable that, so the first test, if I'm going to short a stock, is I want to establish that the uptrend has been broken, and in this case I do not believe it has. The next thing I like to do is I like putting a Bollinger Band onto the chart to see where the chart is relative to the Bollinger Band. So I'm going to put a standard Bollinger Band chart on and see what has actually happened. And typically what I like to do is if we go back to the spell here, we'll see that we've touched the bottom of the Bollinger Band and then headed away from it. Go back down, touch the Bollinger Band, get a close above it and head away from it. So if we look at the current situation, we have touched the Bollinger Band, closed below it in this case, and then the following day we had an open just on the band and then an open up above, and it is now run away past the halfway mark. And the question for me then is that would I short the stock? At what point do I short the stock? And if we take this example over here, we've got closes below the band, we've got an open above, and we keep tracking back to the band. And it's only when you get two successive closes or three closes below the last touch of the upper side of the band that you should consider shorting. So in this case here, it would say after the second one you could short here and then run it down to here. And this one here, the second close below, short here and run it down to here. With stop loss staying up here, this particular trade, you'd still be in the trade. So from a Bollinger Band point of view, I'm seeing the price heading above the midline towards the top part of the band. I'm certainly not looking to short the trade or even exit the trade. The next part that stands out for me on this chart is that on Friday's pricing, we had a high that was higher than the previous high of the 24th of June. So the price is certainly not indicating that it wants to break lower. So the next thing to do is to put the next technical indicator on the chart, which I will put a momentum indicator, and I will use MACD for this case, because MACD can be a leading indicator to tell us if something is going to break down in price. Okay, what we see here is we certainly had that high over here, this slightly lower high. See, the MACD was starting to indicate that there was some momentum. The momentum was running out and it was starting to run down. And we've seen that running down steadily here, so matching those pricing there, and then we see the MACD has now turned, and the signal line is about to cross zero, which suggests to me from a momentum point of view is the stock still has some way to run. Now, what is the next thing that stands out for me on this chart? And the next thing that stands out, as you'll notice on this chart, is you've got this marker called E. This is the earnings announcement, and what's really striking here is something is happening in the market in the run up to earnings. We've seen it here. Price drops down before earnings. Earnings comes out, price runs. Price drops down before earnings. Earnings come out, price runs. This one here is the exception. The price dropped at the earnings time. I think this was around the Apple Watch announcement, before the earnings came out at the same time they launched the Apple Watch. And so that's not what they normally did. So it's a change in what their announcement patterns were. And this one here, we're seeing a very similar pattern, is a drop down, so bidding down ahead of earnings. Now we've no idea what's going to be in earnings, but it certainly raises a red flag for me that says there is the chance, if earnings has any element of positive surprise in it, the price is going to continue running, because that is pretty well what it has done in two out of the last 3 earnings announcements. So from that purpose, I would certainly not be looking to go short this stock. The next thing we would have a look at is say, well, if I was to go short this stock, I always use options as a way to do this. And the step we need to go through options is to see, are options expensive or not. So I will look up the implied volatility for, so we can see Apple stock. I will use 3 months because I'm going to do it on a short-term basis, and we'll see where we stand here. And options volatility is around 22%, and that's pretty much the lowest it goes. It's been a little bit lower than that. So the first step for me is, are options expensive? No, they're not. So I can certainly use options. And when I'm going to go shorter stock, I like to go on a short-term options basis. So I've pulled up the options chains here. I'm using October 15, so 3 months away from now. That'll basically take us up to the next earnings announcement. And looking at what a put would cost, the current price is $129. So I would go for an in-the-money put of one at $130. That gives me $6.45. So at the current price, if I get a 130 strike, 645, my break even then will be 123.35, which is here. Let's draw a cross line here. Let's draw a horizontal line there. 123.35. So roughly there. That's break even. And then another 645 from here takes me to that's 117.35, 116.45, 116.65, 75. So roughly there. That would be 100% return on the trade. And the challenge for me is that there's this massive horizontal level here that is going to provide resistance and a floor for the price. So what we'd have to believe that in 3 months, price is going to drop through that level to break even, and then to reach $116 to produce 100% return for me. So my instinct, it was that I would not be shorting Apple stock. My technical analysis suggests that this has the probabilities is there is more upside than downside, and the option pricing is suggesting to me that it's going to have to perform appreciably worse than it has done for the whole of this year to produce 100% return for me. And of course the question is, are there other shares other opportunities that have a better than 100% return? And I can certainly think of a few. So for example, let's just pick one of the trade areas I'm running on at the moment is this one here. I would far rather be running this particular curve, which has made a strong run up, proved that it is running down, it's made a correction, and I would far rather be running there. This one is the index, the exchange traded fund that tracks China, and this chart may well be the chart that eventually tells me when Apple will turn, if it is going to turn down, because if China is sick and this thing does break down below this level that it had here, Apple will also be sick, and that can't be identified in the technical analysis yet for Apple. But if I was wanting to short anything, this is what I would be shorting China in some form, either using this exchange traded fund, which is FXI, or using an exchange traded fund that tracks the Shanghai Composite called ASHR. I hope that helps.